What's up everybody, and welcome back to a new video on Altcoin Nexus. And in this video we will talk about Mt. Gox. Alright, we'll do a full kind of explanation video of the potential market impact, whether this will actually crash the markets or whether it's very much overstated right now. Obviously right now all of the eyes are on the Germans selling off their Bitcoin, which is almost done, or at least they still have $750 million. Which is not nothing, but compared to the Bitcoin amounts we'll talk about, it's relatively small. And it's also, at this point in time, I would say the market impact is actually relatively low. Now, Mt. Gox, though, is, first of all, more Bitcoin. It's also more hyped up, all right? A lot of people have an opinion on this, and a lot of people are very scared about it. So I thought, let's make a video. Let's put all of the facts under each other, and let's talk about what effect this actually has. Because personally, and I will explain that in this video by going over this article I found by Luke Nolan from CoinShares, a research blog, which I will link down in the description. I would definitely recommend you to check him out. But personally, I think the real effects of the selling of the Bitcoin coming from Mt. Gox will be limited. Now, what the effect will be because of normal investors like you and I becoming scared of these sells, that's difficult to estimate. As always, that has to do with sentiment a lot, and sentiment is very, very difficult to analyze, but still, let's talk about this. All right, so a quick summary. Mt. Gox is preparing to repay creditors in July, so that is right now, but it will probably be over the next couple of months. Although they hold 142,000 Bitcoin, the actual amount to be distributed is closer to 75,000, and we'll talk about that. It will occur at different days throughout the month, so it will not be one big sell. And that is, well, Bitcoin Cash is more likely to suffer because Bitcoin Cash is also to be paid out. But we'll talk about that. All right. So first of all, to give you a little bit of an introduction, Mt. Gox, as most of you know, was an exchange in the early days. It was by far the biggest exchange. They had a ton of things happening, bad things happening, and then by February 2014, they had to tell everybody that they were insolvent because they had lost 744,000 Bitcoin in a theft that had gone on for years. All right, so in general, very big exchange, but they had their problems. So what that means is they lost a lot of Bitcoin, and they still had a Japanese trustee acting on behalf of Mt. Gox who held 142,000 Bitcoin. So that's the Bitcoin that is to be repaid. So like I said at the start, this is actually in reality, it's much less Bitcoin. And we'll talk about that. First of all, Mt. Gox creditors were either able to either select a full cash repayment or some sort of a repayment in kind. All right, so cash plus Bitcoin, which is, we don't really know the distribution percentages of that. So that's something, like, the information is limited. All right, we don't have the full information, but still we have some information to talk about this. All right, so you had that deal that you could be paid in July, or at least in the short term, for 90% of the owed amount. And it's estimated that 75% of creditors took this deal. So that already brings that initial very high amount of Bitcoin down to 95,000 Bitcoin. And then 1/5 of this Bitcoin was to Bitcoinica and Mt. Gox investment funds. All right, so this is in total 30,000 Bitcoin. Now, Bitcoinica, we don't know what they're going to do with it, but we do know that MGIF, or the Mt. Gox investment funds, will not sell their Bitcoin. They have 20,000 Bitcoins. So that means from that 95,000, 75,000 is probably going to be the real amount that will be sold off, or at least that could hypothetically be sold off. In the end, it's a lot of investors, it's a lot of parties, we don't know. All right. And then of the 75,000, 65,000 is assumed to be owed to individual creditors. Now, that's obviously, that's the big part. All right. These investors are up a ridiculous amount. So the big question is will they sell? And the logical answer would be yes. However, there's a couple of things you need to take into account. All right, and the first thing is that if they were to sell, well, up 13,600%, it would be a major tax event. Now, they would be up a ton of money, so maybe this is not an issue, maybe this doesn't matter too much to them, but it is still something to take into account. And I just realized that my sound was very, very low, so turn down your sound a little bit and we'll go on. But then apart from that, throughout the last 12 years after the hack and after these people lost their money, what they could have done is if they wanted USD, there were a ton of buyers who were buying the claims to those Mt. Gox payments at a discount. So if these people really needed the dollars and if they really wanted the dollars, then they would have sold it to these people buying up claims. So that's again a amount of Bitcoin, or at least that's another factor why these people would not sell off all their Bitcoin all at once. All right, and then apart from that, what we touched upon earlier as well is that not all of these Bitcoins will be sent to the exchanges at one point of time. It will probably be over a couple of months and then at different days per month over different exchanges, all right, so that the liquidity is spread out a bit. And if you look at it this way, the average exchange inflow per day over the last year has been roughly 32,000 Bitcoin, excuse me. So if you compare that to the 75,000 Bitcoin we talked about earlier, it's still a very high amount, but compared to that, it's actually like you can relativize it a little bit and say that, all right, well, it will have an effect most likely. But that in combination with all the other factors like the parties that are not going to sell, the claim buyers, the potential tax event, makes the potential for a huge crash much likely. Now, this article comes with some sort of a calculation as to what could happen depending on how many of those Bitcoins will be sold off based on the factors. And if sold off in a day, as you can see, it can be a pretty big decrease, up to minus 20% on a day if 45,000 are being sold off. But the daily price impact over 30 days, according to this model, is very limited. And if you take all of this into account, all right, so all of these limiting factors, or these factors that are limiting the market reaction, or at least the bearish market reaction, if you take that into account with interest rates that are most likely to drop down, the political situation in the US, and just in general economic circumstances in the world, and expected market movements, but that's a little bit more prediction, of course, that's speculation. There are a lot of positive factors as well. And Mt. Gox is a sell-off event, all right? It's bearish. It's more, or at least it creates more supply, or at least potential supply. But in the end, personally, I think that the effects of it are overstated. And even though I do expect Bitcoin to still drop down lower in the short term, I don't think it will be too much of a black swan or disastrous event. And those are my thoughts. That's what I think you need to know for now. If you do have any questions, let me know. Like I said, I'll leave a link down to this article down in the description so you can check it out for yourself as well, which I would recommend. But for now, thank you for watching. Consider subscribing, and I'll see you all in my next videos.